right, let's, Serge, give me a second. Let's do an audio check. In any case, that could happen any moment. Got my friend Serge here.
Hey, Jeffrey.
Actually, I'm putting the right way on my screen, but I don't know. It might be here or here, depending on how you've got your setup. All right. Hey, everybody. I'm Jeff Gibby with Metastock. I hope you're doing well. Thanks for joining us today. If you're watching us on YouTube, make sure to hit like and subscribe. It helps a great deal. We appreciate it. This is a live cast, so it's good to see you. Thank you for coming. Also, everybody, thank you for coming. Again, my name's Jeff Gibby. I'm going to kick off with some of the legalese that we have to do in our webinar room. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators or features within the software. The information, software, and techniques presented today should only be used by investors. That's my place. I've only read this 3,000 times. By investors who are aware of the risk inherent in trading, Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Good evening, Diraj. It's good to see you. All right, Serge is our guest today. Serge spoke as part of a really big conference that we did. And I also have known Serge for a few years now, at least. He has a really, really cool option strategy. It's integrated into Metastock, and he's going to talk all about it. And what I wanted him to do is come in and do a bit of an encore presentation. I just really like the approach that he uses. And so, Serge, welcome to the room.
Hey, Jeffrey. How you doing? And thank you, everyone, for taking a little bit of time out of your day. We always appreciate it. I will quickly share my screen here. 1 second. I believe it's this one.
Also, if you're listening in GoToWebinar while we get this set up, if you're not attending a GoToWebinar, just let us know if you can hear us. Say hi. That always helps, and I don't know. I always feel better if I know you can hear me. Serge, are you the same way?
Oh, I always like. We look at whether it's credit card delinquencies, which are going up, a resetting of rates everywhere. So think about this, either personally, right? If we go out and buy a new car right now, it's going to cost us a lot more in terms of interest. If you lease it, buy it outright. That's a different story. And then if you think about it on the corporate side, people's bonds, someone's bonds is resetting every day, right? At extraordinarily higher rates. So the thought that we're not going to have, some sort of a recession is mathematically very difficult for me to get my head around. So the no landing or even the soft landing stuff is a little bit challenging for me to believe, having been through a few cycles in my life already. This is now, I think, my 25th year of doing this. So, you tend to see things that rhyme. And, I think this morning, the latest statistic is that I think it's Apple and Microsoft make up 14% of the S&P 500. That's a new record high, by the way. Historically speaking, things don't last like that very long. You take into further account. Yes, sir.
We have resolved and rectified the issue in YouTube. It's back online. So.
Perfect.
I just thought I'd let you know. Go ahead and finish up your thought, and we're good to go on this side.
Love it. Yeah, no, that's great. We'll get started right now. I just was just quickly saying, that even though we're seeing another risk-on rally today, led by the Nasdaq in the equities on the equity side, if you go a bit deeper into the bond market, high yield bonds are recovering basically all of yesterday's losses. But again, these are squeezes that happen. From headlines. The broader economic activity continues to go south, so we need to just keep not lose sight of the big picture. Having said all that, what I would like to do is I'm going to quickly turn the camera off, as I said several times before, and that's just because I don't want to distract myself. So let me quickly do that, and then we are going to get going. Let me quickly turn that off. All right, cool. And again, I'm assuming everyone can hear me okay, so we should be ready to go. Okay, so essentially, one of the pain points that we find people have in this market is income. And so I'd like to go through a couple of things with you guys here today, so you can kind of get your head around, what are we really talking about here, and why does this matter for you right now. So let me quickly get the right presentation up. That might be helpful, and then we're going to get started. I think one of the things that's interesting is that a lot of people are still very much focused on basically what I call chart chasing, and I think that's a very dangerous thing to do in any market environment, particularly one which I described as before as being quite different than what we've had for the past 10 years or so. And so I would like to introduce my friend John. This is a fictitious character, although it's based on a real person. I had to change his name. And John had a thing where over the past 12 years, he actually, up until about a year and a half ago, he made a lot of money. But when we dug a little bit deeper, most of his making money was really just a function of the broader market going higher. And I don't know if some of you guys can relate to that. What ended up happening, though, unfortunately, last year is he had a reality check. And the reality check was really just a function of markets having changed. And so he came to me last September after the following thing happened. And you want to look at the top part of this I guess compilation of charts. And again, this is real. Like, this actually is the account, or John's account, excuse me. And you can see John made almost $1 million in the first half of last year. The problem is that he gave it all up, lost it all, and then some in literally just a few weeks. So what took him 6.5 months to make took him, I don't know, about 3 weeks to lose. And it all had to do because he was basically using bull market strategies in a market that was absolutely no longer bullish. And so I'm going to fast forward through things a bit quicker because I want to get right to the point. But the reality is that this is a different market. And like, for example, even if we look at someone like Morgan Stanley's forecasts, and what you want to look at here is that 2.4, which I'm circling right now. I hope you guys can see that. That's Morgan Stanley's forecast for the average annual return of the S&P 500 for the next 10 years. So I don't know about you guys, but I think it's very difficult for most investors to live with a 2.4% return on their portfolio, particularly with inflation still quite a bit north of that. And so again, it's particularly important if you're thinking about if you would like to grow your account. Again, maybe you're retired or thinking about retiring, or maybe you're 30, 40 years old and you want to make your account grow over time. That's a very difficult way of making it move. And empirically, if you go back in time a little bit, and I'll skip through a couple of charts here, but empirically, it's very difficult to make money in these kind of environments where things are different. So we're expecting more volatility and choppiness, but more than anything, we're expecting lower stock market returns. And so if we're using directional strategies, today's little breakout move notwithstanding, you will find that over time, this is something that is going to be very difficult to sustain. And again, this just comes from someone who's done this for now, I think it's my 25th or 26th year. And so what we really strongly suggest is a small adjustment to our current strategies, which most people find extremely easy to implement because literally it's just a matter of one small change. And it really, a lot of it has to do with understanding mathematics in the markets. So I don't know, but how many guys in here like the idea of generating income in your portfolio? Does anyone like income? Like whether that's monthly or quarterly from your portfolio? Again, type in a yes or something into the chat box or anywhere, right? It's kind of it's an important thing to admit to yourself, which is why we're asking that question, right? Jeff likes income, and so the inherent issue with that need or want is that the returns in markets are inherently nonlinear. So if you look at the S&P 500, for example, you can see that over time, essentially, there's good months and bad months and everything in between. But for those people that are looking to literally generate income on a monthly or quarterly basis, that's going to be a difficult thing to do if the markets don't, go up all the time. Okay, can you guys see that? And so this by the way is more or less what people's returns look like throughout the year, particularly people who are constantly looking to make a buck, quickly. And again, there's a specific reason for that, and it's because the markets are quite random when you're not exactly precisely right about the immediate gratification timing. So I'm going to show you guys something that we do that's had great results over many years now. I actually also manage a fund with this strategy, which I think year to date we're up 15 or 16%. We have averaged over the past about 30% using this specific strategy. And so unfortunately for a lot of investors at home, what the reality of their returns looks like, particularly the self-directed investors, it looks a little bit like this mountain range where they make a little bit of money for a few trades and then give it all up again, and then they make a bit of money again and then they give it all up again, and ultimately, they're just kind of stagnating, right? And that stagnating is very frustrating because it leads to essentially loss of confidence, and ultimately, we end up breaking rules and forcing trades, and before we know it, we're basically gambling. And so we want to avoid that at all costs. And so, that brings us back to my buddy John. When John came to me, he said, listen, I need to do something different because I can't, he literally had lost $1 million, or I think 980,000 or something like that he made within 6.5 months and lost in a matter of a few weeks last year. And so, I don't want anyone here to have that kind of a loss. So what I'd like to do is show you what we're doing and what we also have been teaching John since, and it's been a very different and much more positive outcome from him going forward. Again, this is what happened to his account. And so what we are looking at as a starter point is a strategy that's extremely repeatable. I wrote here, low stress, high probability. Honestly, anyone can write that. It's a bunch of crap, even though it's true for the strategy. The most important is the repeatability. If you don't have a repeatable process or a repeatable strategy, it really, in my view, is essentially an impossibility to make money over time because you have no process to trust. And so what we'd like to do is introduce you to the concept of steep slopes that have gone vertical. Well, when steep slopes go vertical, at some point, and I'm sure you guys have seen this before, they become extremely stretched, where over sort of a 1 to 3 week period, let's say 2 weeks or so, it is going to either mean revert or just pause. That can happen both in the upside as well as in the downside. You can have a stock that drops very sharply and then completely collapses, and it'll get extremely exhausted. Like, for example, if you look at regional banks in March, after that initial collapse, they basically stalled for like a month and a half, right? And a lot of them actually even rallied a little bit, in fact, quite a bit. So that tends to happen, and it has a really high probability of happening. And so when these steep slopes go vertical, one of the things that happens is that investor fear or greed reaches extremes, and we can take the other side of that. And I'm going to show you guys right now what that looks like. I'm just going to quickly fly through this chart. I don't want to go into this too much because I want to look at the market as it is right now. But what is being taught out there is that options need to be sold, not bought. And while that's technically certainly something we agree with, a lot of people focus on the theta, the time decay stuff. So they end up using very short-dated options like weekly options or, God forbid, 0 DTE. And what a lot of people don't know, and this is not just my view, this is literally statistically factual over time, short-dated option strategies blow up. I can tell you this empirically as a fund of hedge fund analyst, one of my prior lives as a fund manager as well. The short-dated options, ultimately, it's not a question of if, it's really a question of when. It can take 5 or 10 years for that to happen, but ultimately those strategies blow up portfolios. And it has to do with the distribution of returns. And so what we're going to do right now together is we're going to do the following 4 steps, and we're going to go into the current market. So know that we're not going to just ignore the current market, and we'll of course look at anything relevant here for you. So what we'll make sure first is we're going to find these steep moves, and I'll show you guys. We have an indicator that you can use either in MetaStock or there's some other places as well, which of course is why we're here talking to MetaStock and to the MetaStock audience and with Jeffrey. we're looking for steep slopes that have gone vertical and give us these signs of exhaustion. And then we're going to look to use a specific option strategy, which I'll go to in detail right now. It's very, very simple, but in our view, in my years, 17 years of doing this strategy and 25 years total, it has to be done this specific way. Otherwise, the results won't be the same. So again, we're going to be looking for very steep moves that have gone vertical and give it the signs of exhaustion. And then ultimately, the asset in question, this could be a stock, an ETF, something else, will tend to stall over time or go down over sort of a couple of week period. Same thing here. You can see this is an old chart of Netflix. You can see a steep move vertical, and then it just stalls and either goes down for a while or just goes sideways. And that's really the opportunity set that we're looking for. So essentially, the upside becomes capped or limited on a move to the upside, or becomes limited to the downside if the stock is collapsing. And so what I'd like to show you here is what this looks like if we go into a stock that I think a lot of people would probably be familiar with, which is Meta, right, or formerly known as Facebook. And so what I'll do is I'm going to quickly actually flip over to the other slide deck that I have here, so you can see this very clearly. But before we do that, let me just finish this slide, and you can see Meta at the time had a very steep move to the upside, but then ended up having these vertical rallies, right? And after each vertical rally, the stock ended up getting extremely overbought. And yes, it mean reverted, but more importantly, it stopped going higher for a couple of weeks at a time. Which is really what we're looking for. So let me take you to this next chart, and again, I'm going to quickly flip on over to another slide deck. And this is the same chart that I showed you. And what you'll see here is that Meta once again got to the upper end of its trading range. And again, this is a historical example, so I can teach you the strategy first before we go into the current market. And what you'll see is, I would imagine some people would agree that once the stock got to the upper end of that range or went vertical again, maybe one could take some profits, but one could also maybe do a directional trade, like buy a put or short the stock. The trouble is, if we buy a put or short the stock at that point, we're only going to make money in one specific direction, and that direction is down. So unless the stock goes down, we will not be able to make money if we buy a put or short the stock. Even worse, if we use short-dated options and the stock goes against us, we're toast, right? So short-dated options are the absolute enemy of us for if you want to have steady returns. Short-dated options are great for making punts and quote-unquote gambling, but short-dated options are all or nothing bets, which do not bode well for strategies that are looking to generate a steadier stream of positive returns. And this is, again, not even my opinion. This is empirically, statistically, factually proven. So what can we do here? Well, if we short the stock and the stock goes down, we make money. But if it goes sideways or higher, we lose money. Same thing if we were to buy a put. But what if I could tell you that there's a way we can make money whether the stock goes down, sideways, or even against us to a degree? We do that by making the bet of where the stock is most likely not going to go. And I'll show you in a minute what our tool does. And again, this can be used in multiple platforms, including, of course, Metastock, how we can find these points in time, which, of course, is ultimately what we're after. But I want to show you how we actually execute the strategy first. So at the time there in February, we sold a call at the 125 level, and we bought one against it at the 130 level. And we received deposited in our broker account $1, which translates into $100 per contract, or $1,000 with 10 options contracts, again, coming into our broker account up front. Now, in this case, you can see a few days later, the stock did actually go down. And I'll show you guys an example in a minute where that didn't happen and we made just as much money. But in this case, the stock did go down and the spread was reduced to 24 cents, which means, in layman's terms, we were able to basically keep the difference between the $1 we received up front and the 24 cents it cost us to close the trade. So we made a profit of 76 cents, or $76, $760 of profits with 10 contracts, But again, the crazy thing is the stock didn't actually have to go down for us to make money. It could have just as well gone sideways or even against us. I think up to I think almost 8% in this case, which is really fabulous if you think about it, right? Because if you're using a short dated option like a put, or you short stock, unless the stock goes down, it goes down right now and it goes down by a lot, you're not going to make money. In fact, you're going to lose money. But in this case, I could be completely wrong to a good degree and still make money, right? That's why this is high probability. That's what we call high probability trading setups. The other thing that's important about this, before we look at the actual indicator and how we find things, is the fact that we're using options that expire quite a bit out in the future, but only hold the trade for 2 weeks at most. In this case, you can see the trade was only open for 6 days. So if you look at this closely, you can see the time we opened the trade, as it says here, is we opened it on February 2nd. But you'll also see that we didn't use short-dated gambler options like, weekly options that expire, later on that month or week. We didn't even use March options. We used April options, right? So in early February, we used April options. But we only held the trade for 6 days. Why do we do that? Because if the stock goes against us and we use short-dated options, we're toast, right? So there's no way out. It's an all-or-nothing bet, which is fine if you don't really care about making money. It's fine if you want to gamble. It's fine if you want to just put everything on red and let a trade go. And every once in a while, that's okay, right? But just know that it's a very low probability bet. But instead, what we like to do is use options expiring at least, say, 55 to 85 days out, but only hold the trades for a couple of weeks, right? That's really important because ultimately, inevitably, you end up sitting back on a short-dated option, and that, of course, is the exact opposite of what we're trying to accomplish, right? So this is important. Now, I want to show you an example here before we go into the market. This was the S&P 500 in March of 2020. You guys might remember that time as the COVID lockdown period. And what happened at the time was that the S&P had dropped about 30% in 3 weeks. And I remember going to the office that morning on March 16th, and we had our morning meeting internally, and we were talking about the market, and we said, yes, it's oversold. But we said, yes, we also don't feel like comfortable buying it. So instead of buying the S&P down 30% in 3 weeks, our bet was only that it wasn't going to drop another 18% on top of the 30% it just fell in 3 weeks. But it wasn't going to drop another 18% on top of that over the next 1 to 2 weeks. That's the only bet we made, which means the stock, or the S&P in this case, could have gone sideways and made money, which it did, could go higher and make money, or even against us up to, I think it was 18 or 19%. And so in March, we used June options. And again, this is really, really important, particularly as we start looking at the indicator in a second. It's really important. The details do matter here, right? So just be aware of that. In March, we used June options in March, but we only held this trade, as you can see, for 8 days. We opened it on March 16th. We closed it on March the 24th, right? But what you might also notice, if you look at this really closely, or you can look at it on your own charts, on March 16th and March 24th, the S&P 500 was at the same exact level right there. So how in the world did we make 11.4%? Well, we did because the trade was structured properly. We weren't using short-dated options. We were giving it a lot of room for error, again, from a dimensional perspective, space, I mean, and that's what happened. So, it's just incredible what you can do in the market if a trade is structured properly and we're not gambling. So I hope this is starting to kind of, make some sense as to what we're doing here. What I'd like to do is just quickly, before we look at the current market here, I'd like to just explain a little bit that these credit spreads, these options credit spreads that we do, we really put them on at the beginning of every sort of month or week or quarter, right, to lay that sort of base layer of income that we're looking for. And then, of course, on top of that, one can still do other kind of things, whatever you do, right? But it's that income base is what we're after, and ultimately compounding on that over time. I will show you guys how we can actually find this indicator and use it on MetaStock in a minute. But let's first go through the concept a little bit more, and actually look at the current market as well. So if you just give me a second here, let me get back to Let me get back to this so we don't lose focus. But essentially, what we're looking to do is we're looking to find opportunities in the market where the market is either extremely overbought or oversold. Like, for example, here you can see the stock was extremely overbought, and you can see those arrows appeared. And to the right of those arrows, you can see the stock stopped going higher. In fact, it went lower. Same thing, for example, here in this ETF, you can see the stock stopped going higher. It just paused, and ultimately actually did go lower. But the point is it'll pause. So what I'd like to do is I'd like to just show you a little bit what this looks like in the market right now. And so again, we're going to show you how this can be done in MetaStock as well in just a few minutes. But just for illustration purposes, I'm going to show you guys how we can do this using our own cloud-based version, just so I can navigate around it pretty quickly. For example, let's look at Shopify. So what happened in Shopify is that the stock got extremely overbought. And you can see that right there when those arrows appeared. Now, for example, if you zoom in a bit closer, and I'm going to make this a very large chart, you can see that on the 5th of May, which was just a few days ago, our indicator told us the stock is overbought. It basically said, be careful, the stock is soon going to basically go lower or stop going higher, is really what it's trying to tell you. It gave us the same warning signal on the 8th of May, so the next trading day, and again on the 9th. And then finally, on the 10th of May, you can see the stock no longer had that little down arrow on top of it. It basically meant that, listen, this stock is now going to most likely either go lower or consolidate. Since then, I believe I don't know where the stock is trading right now, but I know it was down quite a bit again this morning. But of course, I have to quickly have a look. Yeah, it's right now the stock is up a touch. It was down about, I think, almost 2% earlier today. So basically what we would have done, what we did, and this is factually exactly what happened, is we would have sold a call way up here and then bought another call against that a bit higher. So the way that would look like, if I were to just kind of quickly draw some lines in here, and again, I'll show you how we do this on MetaStock as well, of course. We would sell a call there, and then we would buy a call against that a bit higher, right? So like that. So basically then, as long as the stock stays below this lower line, we stand to make money, right? So that means, again, I can be totally wrong, and the stock can actually go up here, it can go down, or it could go sideways and I could make money. And so particularly for those people that care about making money in the markets, if you care about your money, if you like to make money as opposed to just being entertained in the market, this way of thinking can really make a huge difference, So I wanted to point that out. We can also look at, for example, and I'm just going to quickly, all I'm trying to do is basically type in some popular names that I'm imagining a lot of people in here have looked at in the past. So, like, for example, Airbnb, right? So this one got an overbought signal a couple months ago right there, and it basically told us the stock is likely going to stop going higher. And of course, what happened ultimately is the stock ended up dropping as much as 18-19%. But more importantly, it stopped going higher, right? So we would have just sold a call up here, then we would have bought a protective call against it a bit higher, and then just keep it on for 1 to 2 weeks and move on with the profits, right? That's really all there's to it in that sense. Or JWN is another one that comes to mind of late that we had noticed or put on a trade. It got extremely overbought, and then you can see in this case the stock is still sliding. Actually, it's down, I think, something like 45% or something like that since then. But again, instead of shorting it, the higher probability bet is to sell a call up here, buy a protective call against it a bit higher, and then just keep that trade on for 1 to 2 weeks and move on. Is this starting to resonate with you guys? Twilio is another, I think, popular stock that a lot of people are watching. This one actually gave us an oversold signal. So if you look back there, you can see the stock got oversold. So what did we do? Well, we would have sold a put down here, bought a protective put against it, and just keep it on for 1 to 2 weeks. And you can see in this case, the stock very quickly jumped 40%. I mean, I couldn't make this up if I tried. right? I'll show you this in Metastock, right? Just so you guys can see what this looks like. This is in Metastock. Here's Nordstrom in Metastock, right? The overbought signal. And then here's Airbnb, just so you guys can see this works in multiple different platforms. Let me see what else. And again, I'm just trying to pick some I think tickers that everyone kind of knows. Dick's Sporting Goods is another one that comes to mind of late. Ugly down day yesterday, but anyway, you can see what happened here. I mean, the stock got extremely overbought. So finally, on the 10th of March, and let me make this a bit larger so you guys can see this. Finally, on the 10th of March, the stock got to a point where the indicator told us, hey, the stock's overbought. It's probably not going to continue higher. And so what happened? As you can see, the stock ended up dropping about 12%. So what would we have done? What did we do, actually? This was a trade we did. We would have just sold a call way above the market, bought another call against it a bit higher, and just move on with the profits after 1 to 2 weeks, right? Are you guys starting to see how this works, right? It's extremely important to understand the concept. Now, I've shown you the strategy, but it's important that we have a tool that finds us these trades, and so that's why I'm showing you, some popular tickers that I think that people should be aware of. For example, if you look at, for example, Western Alliance Bancorp, if you can see this one, for example, this one of those regional banks, it got extremely oversold in March. And, if we just sold a put down here and bought another put against it for protection, after 2 weeks, not only was the stock actually higher, but it just trotted sideways. So we would have made very nice money very quickly. The stock stopped going lower. Same thing a few days ago, right? If you look at what happened a few days ago, we got another oversold signal, and since then the stock is just going lower. So if we would have just sold a put down here, bought a protect one against it, we could make money. So again, it's just about thinking less linearly in markets that can really make a huge difference in how we make money. Or we can look at ETFs for example, like the broker dealers ETF just comes to mind. You can see how that got oversold, and again, it just went sideways. If it would have bought the stock or bought a call, we would have lost money. But since the only bet we made is that it doesn't go much lower, if it just goes sideways or higher, or even against us to a good degree, we make money. And that's exactly what happened. Again, they're just trying to show you some recent examples so you guys can kind of see what that looks like. Does this make sense to everyone, folks? Give me a quick yes if you can kind of see where we're getting with this. Another one that I remember that I took a little while ago was Nike. This is now some time ago, but Nike got extremely oversold, right? And you can see I actually already annotated this because I did this trade. So instead of buying the stock at the point, which gives us a lower probability, we simply sold a put, bought another put against it, and in this case, you can see the stock ended up actually rallying about 62%. So this is an extremely important concept to understand, and I'll show you guys in Metastock how you can search for it. It's super simply as well. On our cloud-based version, what we do is we can literally just go in here, and you can see every day there's overbought and oversold signals, right? It takes literally seconds to find one. Like, for example, I showed you Shopify came on the radar 5 days ago. So if this was today, it would be up here, right? Like right now. And again, you can see so far, I think up until earlier this morning, the stock was down about 8%. So this is I literally just closed this trade today. In fact, we closed it with our clients this morning. It was a nice profit. I think it was about a 10% gain on 11%, something like that, literally in just a few days. Now, the other question, of course, is, can you use this indicator intraday? And I'll show you guys this real quick. The algorithm works intraday as well, and this is where Metastock comes in as well. So let me show you this in a second. But before we go into Metastock, let me just show you one more thing here, just on intraday. So, like, for example, this is Apple. I think this was yesterday. This is a 5-minute chart. And you can see our indicator. You see how it got overbought, and then the stock ended up dropping, right? The algorithm works in all time frames. Now, I don't do options credit spreads intraday. I do directional trades intraday. But the algorithm works in different time frames. Or if you look at Meta, let me bring this over real quick. So this is Meta, right, which is actually rallying quite sharply again today. But look at yesterday, you got an oversold signal. Can you see that? If you zoom in, that's the oversold signal yesterday. The stock then rallied the rest of the day 1.3%, and now in total it's up 3.2%, right? So the algorithm is extremely fine-tuned to find extreme oversold or overbought signals. I don't know if any of you guys use futures, for example. I know Metastock can use futures and all sorts of data as well. But like, for example, this morning, we got an overbought signal intraday, right, for about a half an hour or so. Again, this is intraday signal, right? So these are quick in oil, and then oil ended up actually dropping very nicely, about 1.5%, right? So that's the power. Now the power of using the indicator. Let me go over and show you again what this looks like in Metastock, and again we can use it on different platforms. But what's nice on Metastock is that all we have to do is open up the Power Console, and then in this case I just checked basically U.S. equitable stocks. You can choose whatever assets you look at, and I hit report. Hey, sorry, start exploration, and then I get these signals. Like, for example, a few days ago, we got the following signals. I'll show you this. We got, for example, these, right? One of them was Shopify, right? And we just showed you that a minute ago, right? This is, and then literally I took the screenshot a few days ago, so I couldn't make this up if I tried, right? Go look at Shake Shack, right? It was overbought as well. SHAK. That's really what we try to do here, is to make sure we give us the highest probability opportunity to make money in the markets using an extreme overbought and oversold algorithm. Now, the way we created this, or the reason we created it, is because when I was working at JP Morgan, one of our proprietary our sort of in-house, I don't want to call it secret, but it was kind of our project on the side, was to find extreme overbought and oversold readings. And what we ended up finding is that there's a uniform algorithm across different asset classes that gives us a really high probability if something gets extremely overbought or oversold. So let me show you this again. So again, this happens to be in Metastock, and you can see Shopify, right? Extremely overbought, like I showed you a minute ago, and it's now down 8.5% since I took that screenshot. So what I'd like to do, and that's what we partner with Jeffrey Metastock with, I'd like to give you access to the indicator. And as you guys can hopefully see, there's a process here that really works. It's proven. I've used it for 17 years. Again, I actually manage a fund with it over at that Blue Marlin Advisors. You guys can check out bluemarlinadvisor.com in case you care. It's our investment advisory firm. But what I'd like to do is introduce you to the options income secrets, because a lot of people like to generate income in the market. And so what the options income secrets package is going to do, it's going to teach you to use options the way that we do. And we're also going to give you full unrestricted access to the Vertical X Pro indicator, which again, you can also, of course, it's available on Metastock. So what are you going to get? You're going to get this high probability cash flow. I'm going to call it income strategy. The benefit is that it gives us steadier and more regular income into our account, meaning that we don't have to second guess trades. We know every month that we have a reliable strategy that could really put the odds in our favor, and ultimately, of course, hopefully dollars into our account. That's the whole point. And with this package, you'll learn to use options the way we do. The benefit, of course, is that you start trading with more confidence, because trading is all about having a process, and it gets a little bit easier every day until it becomes essentially second nature. But I'm going to give you a cheat sheet as well, so you're not alone, because again, trading is all about having a process. And of course, as I showed you before, I want to give you an edge in the market as well, which I'm going to give you this indicator along with the scanner, whether you use it on Metastock or elsewhere, because this is not just about education. I also want to give you an edge in the market like all the pros do. What's really cool, and to me, the best part about this entire indicator and this process is that it really gives us access to the highest probability options income setups or even day trades, right? And it's available on multiple platforms, whether it's Metastock, which of course we're talking about with Jeff, other platforms you can see here on the screen as well. And we have our own cloud-based version as well, which you will get access to whether you like it or not, including, again, being able to use it on Metastock as well. I showed you our cloud-based version. This is a no install yet. There's nothing to install, so it's all hosted on our page. And you can even use it on your iPads and stuff like that. So again, to me, the biggest thing about the indicator is that it gives us access to the highest probability options income strategies, setups, and also even day trades. So I'm going to give you a platform and a foundation here, whether you're new to trading or maybe you've been done this for a while, where you can then look to the strategy month over month, quarter over quarter, just to create a steadier stream of positive income, which is what we are doing. That's our goal. That's our focus for this entire strategy. Everything that you need to use the strategy is included here. I'll go through all the details here in a second, but just so you know, you won't be the first one. There's actually many thousands of people that are already using this. One of them, for example, is Dave. He wrote this just the other day. He said, if you take good notes and you follow the rules, and again, it's important to use the rules here, you can make good, steady income. His words. You can see other people. Timothy, he wrote, great indicator, great strategy. It's my bread and butter strategy, and so on and so forth. I could probably show you 50 pages of this stuff. I will say though, I think if you're the kind of person here that is looking for a thrill in the market, if you just want to, don't really care about your money, if you're just going to put it all in red and trade the latest and greatest chart breakout in high hopes of being able to pay rent, this is probably not your thing. In which case, I certainly appreciate you having been here, and I hope that you learned something or something was helpful here. But if you are the kind of person who's serious about your portfolio and you're looking to generate more steady streams of positive return, what I can tell you is that this is a proven process. I've done it for 17 years. We even, again, like I said, we even manage portfolios with it, a fund for our clients. So, we really stand behind this. And I think, Jeffrey would agree from what, we actually worked together on putting it on Metastock as well, that this is a nice strategy and a nice indicator. And the point is really to turn it into an income machine is really the ultimate goal. So here is how it shakes out. What I'd like to do is I'd like to give you access to this. And let me just quickly go fast forward to the slide here so you can write this down and or call in. Okay. The way it works is this. If we were to just look the actual course videos that are included, that's a value of $976. Every month for life, this is a lifetime deal, by the way. You only pay this once and you're a lifetime member. We do member webinars where we give you an actionable trade every single time. We literally just closed one today for our clients at Shopify. That's the first example I showed you. That's $997 in terms of value. The vertical expert indicator, as you saw it today, that's a value of $1,997. We have an Iron Condors videos included as well. So the total package value is $3,970. We're going to knock off 90% here for being a part of this webinar here, and as a thank you for joining today in the webinar hosted by Metastock. And it's just $397. So that's $397, and that's one time. You'll never pay this again. It's a lifetime offer, meaning you pay it once and you have lifetime access to the indicator, to the course, to the member webinars every month, And actually, and this, we're super excited about this, we have a brand new chat room that we launched about a month ago. We couldn't be more excited about it. People are loving it. We post trades in there from the Vertical X Pro, intraday ones, credit spread ones. It's really a lot of fun. It's limited to the first 50 people, so do make sure you get this sooner rather than later. The offer link. So what you either want to do is you want to go to thesteadytrader.com/meta. If you're one of the first 50 people, you can grab it at $397. Again, this is not a recurring fee. This is not going to be something that you have to pay again, on an annual basis or quarterly or monthly. It's literally one time, and you are a lifetime owner and member of this. You can also use PayPal on that link, by the way, which allow you to, I think, even finance that into like baby payments. But otherwise, you can use credit card as usual. So it's thesteadytrader.com/meta. I'm going to quickly type this into the chat box. So it's www.thesteadytrader.com/meta. Or if you want to, you can also call 401-203-7389 if you feel more comfortable ordering by phone, or if you have any questions, of course, we're there to help. So that's 401-203-7389. I'll also quickly try to type this into the chat box. Now, we just launched a chat room included with this as well, this is all lifetime, right? So you only pay this once, you're a lifetime member. The chat room is fantastic. It's on Slack, so that means you can also what are the words I'm looking for? You can also install it on your phone, on your tablet, or whatever you have, right? So on the go, and be connected with us. Let me see here. What else? In terms of Metastock, we just had our last members webinar. We're doing one again, I think, next week or the week after. We just had one on May 11th. And once you go into the members area, I should probably show you this quickly. Once you go into the members area, what you're going to get access to is pretty much everything you need. So you'll get an onboarding phone call from one of our team members. I take that very, very serious. So they'll show you exactly how to navigate around the website. But you click on indicators on the members area, and then you have access to the member webinar recordings. You have access to the cloud-based version, which I showed you before. So when you click on that, it right away opens up that cloud-based version of the indicator that I showed you before. That's this, right? So with one click, that opens. You can also make sure you get access to the Metastock. And again, I know Jeffrey will talk about that here in a minute. So that's all there. We're very serious about customer service. I really want to make sure everyone gets the best experience, and that means that you're going to get a personal onboarding phone call. So anyone that's joining, you will receive a phone call from one of our team members. If they can't reach you, they will send you an email. I would really encourage you to take that serious, and then they'll also tell you, again, how to navigate the website. They will make sure that you know when the next member webinar is, or to watch the last recording, and answer any questions you have around the sort of, the operational part. What you really want to do is you want to join the member webinars. You really want to join those. Not only do I give you a trade, so like, for example, I showed you before that we did this Shopify trade last week. We already today closed. On May 11th was our last member webinar. I gave people the Shopify trade. Remember the one I showed you? We literally, I couldn't make this up. We just closed it today. I think it was about a 10% profit using exactly this indicator, right? Daniel is asking a great question. How often does it produce a losing trade? I would say maybe about 25% of the time, but usually the trades that don't work out for a reason, meaning there's an earnings event coming up. So like Daniel, we would never hold a trade to earnings, right? So it automatically gets disqualified, right? If you were to hold it through earnings, we would never hold anything through earnings, right? Or the options don't have enough volume or liquidity, right? Again, these are all the little details that we teach you in the member webinars, but it's and again, I know there's a lot of crap out there, excuse the language, but you will find that this is really, really fabulous. And again, you can use it on wealth charts. You can use it on our platform and on Metastock and many other platforms as well. So if you have a phone number that you want to call, the phone number is 401-203-7389. Now, just quickly back on the day trading stuff, because I know some people like to know more about that. I mean, again, it works intraday as well, and whether that's on Metastock and other platforms, it doesn't really matter. As long as you have an intraday feed, you can use it intraday as well. Now, intraday, I don't do credit spreads intraday. I would do directional trades, but like again, I just want to show you Metastock, Meta stock, and Meta the stock. Funny enough, that kind of rhymes. So let me show you that real quick. So this was an intraday signal. Again, I can't make this up. This is literally live, right? So you saw that signal printed. The oversold signal printed yesterday, and Meta is up another 2% on the day almost, right? So that's how that works. Just make sure you get this sooner rather than later, because once the 50 slots are taken up, the price goes up a lot, and you don't want to do that. So either go to thestudytrader.com/meta, or of course, you can call the phone number, which we said before is 401-203-7389. And with that, Jeffrey, I don't know if you're already listening again, but I wanted to just, of course, be able to loop you into the conversation so you can talk about being able to use this in Metastock as well.
Serge, I never left. Why would I leave?
Oh, good man. It was a trick question.
Well, and just to add a little bit to that, I mean, like a lot of things that you get with Metastock are the ability to scan any market that you want to, including all the options at one time, the expert advisor with the signals and the commentary, and it's a very, very well integrated program with that's well integrated with Metastock. It was designed by somebody that knows Metastock really well. Actually, it was me. I should probably vote for it. But there's certainly things I really like clear, detailed commentary that help you understand it. And if you don't have Metastock and you want to do this and you want to use it for any of the other platforms, if you have one of the other platforms, that's great. If you want to try out Metastock and see why it's rated #1 in its price category for 30 years in a row, if you buy this, we'll actually give you a free trial. Just give us a call. So that's really all I got to say about it, Serge. Appreciate the option to come in and talk.
Hey, it's your webinar. But look, I think what I would like to mention to everyone, is there is a shift in mentality that traders have to go through before they start making money in the markets for real. And when I say for real is where they don't give it all back every time. And I still, we touch a lot of clients around the world through the Study Trader, which is our education company, this one here, the publishing company, but also over at Blue Marlin Advisors, which is our registered investment advisory firm where we manage money for people, among other things. I use this strategy for some people who qualify. And we touch a lot of people, and we see that a lot of people are still basically chart chasing, meaning they're still using extremely risky strategies, not really fully comprehending what the risks really are. And so it is truly my hope that something like this will get people to a more realistic place, and stop the shiny object syndrome, which again, I truly mean this. I wouldn't care. I wouldn't even mention this. I've seen so many people get hurt so badly in markets, and that ranges from individuals all the way up to institutional investors. It's just no fun and not a great experience to go through something where you make money for 5 years and then you give it all up again. And unfortunately, and I say this again with I don't like to say this, but it's extremely likely. In fact, there's about 100% chance that a lot of people will lose a lot of money that they've made in the markets over the next downturn. It happens all the time. It's unfortunately proven. So the quicker you can start getting your head around something more realistic, higher probability, the better. And again, obviously, I strongly suggest you use the vertical expo indicator. But that's just my 17 years of doing this, and of course the strategy. So anyway, Jeffrey, listen, I'll pass it back to you. Thank you all again, and Jeffrey, thank you so much for putting this on. I really appreciate it. give us a chance to talk about this.
Peggy, if you want to get a free trial of the MetaStock, just get in touch with us after. You can call us 800-882-3040 or metastock.com/saleschat. And I'll type those in the links as well. I don't really have a lot to add, Serge. We really appreciate your coming in. For those of you guys that are watching, either if it's now or in the future on YouTube, appreciate it. Let us know if you have any questions or if there's anything that we need. Serge, great class. I appreciate it.
Yeah, absolutely. And also, Peggy or anyone else who's wondering about the free trial to MetaStock, obviously, as soon as you get this, we will know as well. So if it somehow ends up slipping through the cracks, which it shouldn't, but I'm just saying, just in case, we will certainly be able to put you in touch with MetaStock as well, so you can get that free trial, right? So either way, you'll be taken care of. Perfect. All right, well, thank you guys. Thank you, Jeffrey. I appreciate it, man. We'll talk to you soon.
Adam, I think you're asking when the recording will be available. You'll get a link to youtube.com/metastock and the exact link in about an hour. But you can go right there and find it right now if you want to, youtube.com/metastock if you're looking for the replay. All right. I think that covers all the questions. Thanks, everybody. We'll see you in a little bit. And thanks for coming.